Today is December 4th and this is your Here in Phoenix Friday morning news.
The Phoenix real estate market is starting to look like a tug-of-war match. On one side, you have inventory levels approaching a balance, and home prices gently rising. But on the other side, the money supply is tightening up, which could stick it to buyers who want in the game.
Over the last few months, we have seen the prices of homes in price ranges below $200,000 affected by the huge demand, resulting in upward pressure on the average price. We are starting to see increased demand for homes in the move-up range between $200,000 to $600,000. This trend should have some stabilizing effects in that range as well.
Normally, that would be good news, a little break from the madness. We are at a 4.9 months supply of homes, which is just favoring the seller slightly.
The supply of bank-owned properties is starting to trend downwards as the number of homes sold at trustee sales has decreased about 10% since the summer months.
Short sales are up, which is keeping the inventory stable. Those banks have finally realized that they lose less money when they do a short sale than they do when they foreclose. Good job, banks.
Since demand has exceeded the supply of available homes since May, we have seen some marked improvements in the housing market over the latter part of 2009.
But all that goodness might take a hit with the impending doom looming over the mortgage world.
Several changes in mortgage industry practices are slowing down the rate at which loans are closed. Changes in the truth in lending policies and the good faith estimate policies are resulting in increased cycle times to close loans.
Rates are at historic lows, hovering around 5%. But lenders have been tightening qualification limits, which means fewer people will qualify. Like it's not bad enough, the FHA, whose loans now make up 30% of originations, has decided that buyers need more skin in the game. They are trying to decide where that skin should come from.
Possible changes to FHA loan requirements may include an increase in the minimum down payment of 3.5%. An increase in the insurance premiums that borrowers pay, an increase in the minimum credit scores to qualify for FHA insurance, or the FHA may require buyers to pay more of their own closing costs.
No matter how you slice that, folks can't buy houses if they don't have the dinero. What good is a first-time home buyer tax credit if you can't get a loan? Who comes up with these ideas anyway?
That wraps up this week's Here in Phoenix Friday morning news.
I mean, seriously, who comes up with these ideas? Do they use dartboards or something like that?